We have been the best performing stock in the Nifty for many years in the past. So for us, that is a high bar and one that we will continuously strive to meet. So just 1 year itself is good, is a starting point. I think we need to do that for many years.
Can I say last 12 to 18 months was all about repair? It was about surviving the COVID storm. Now the company or the group would be in investment mode where growth and new businesses would flourish.
That's right. And we've started that already. So we've gone on a growth mode. We started initially, as you said, with repair. There were a few actions that needed to be taken. And the good part is that we could take them fairly quickly. So we wanted to get to an 18% ROE. Initially, we felt it would take longer, 3 to 5 years. But as it turns out, we're there already. And that gives us a lot of confidence that we can do a lot more. And therefore, we pivoted to growth about a year ago. And we're really driving that growth across all our businesses. We feel that our businesses are positioned extremely well and will scale up very nicely.
When you shared the outlook about growth as well as return on investments of 18%, you gave a timeline of 2025. You've achieved that almost 2.5 years ahead of the curve. So is it time to relook at your 2025 guidance?
We have achieved that much faster. And what that allows us now is to start growing at a much more rapid pace. So we already have in many ways upped our guidance for 2025 as we've done better over the last few years.
So what is the new normal now for the group? If I have to say, what is your guidance now for 2025, considering that you already achieved your number, operating leverage has kicked in, can I say 20 is the new normal for you?
See, from an ROE standpoint, we don't want to think about more than 18%.
Okay.
Because what our investors would look for, thank you, is both growth as well as returns. And therefore, we're really driving growth in a much bigger way at this point.
Why has growth made a comeback? The same businesses which were struggling, which in a sense were contracting, which were not growing at industry average, what has changed?
We want to operate as a startup, as a nimble company, make decisions much faster. And our teams have driven that. We want to take bold actions, and we've done that in a number of different areas, in auto in particular, but across different sectors as well. And the level of collaboration has increased dramatically. So these are the three mantras that I think have made a difference, and therefore I would give all the credit to our teams for really driving those results.
So let me draw your attention, and just for the benefit of our viewers, the fact that you invested into Sangyon and you've decided to get out of that investment. Has the Mahindra Group exited all the low growth and non-core businesses, or that is still work in progress?
We have done that. We were very clear and categorized our companies as A, B, and C. We've taken care of all C category companies at this point.
Okay, so now you're left with A and B. What is the definition of A and B for you?
For us, to start with first, that was a categorization for all loss-making entities. So A was companies that we feel we can turn around. And they actually have turned around, and they're profit-making entities. A number of subsidiaries of the farm businesses internationally, the US, Turkey, Mitsubishi in Japan. So all of them are now making profits. So they're out of the loss-making category completely. Category B was companies that were not at an 18% return, but had a strong strategic benefit for us. And we are seeing the strategic benefits from Sampo, for example, in Finland, for farm machinery. So as from Mitsubishi as well in terms of the technology that they bring to us. And therefore, those companies also continue on a solid path. So at this point in time, we've essentially got rid of all the loss-making companies by turning them around or by exiting them.
Which are the companies which are entering the phase of high growth according to you?
For us, our growth gems. But before I go there, even our four major businesses, Auto, Farm, Tech Mahindra and Mahindra Finance, all four are really in a very strong growth phase. And they will contribute a tremendous amount of growth to the group. And then beyond that, we've got our three listed entities which are growth gems, logistics, life spaces and holidays, and a few others that will contribute very solidly to the growth as well.
So do you see the product pipeline, because that's a benchmark to understand which way sales would move. Do you see the product pipeline exciting as well as full of innovation for next 3 years?
It is very exciting right now because we are planning 5 born electric SUVs starting next year, and that will revolutionize the game. So we're looking towards a very exciting auto journey for us.
You've challenged just about every large SUV category, with Thar priced at less than 10 lakh rupees, and with XUV 700 now, fabulously loaded car, less than 40 lakh rupees. Is that the mantra, that you would be innovating and you would be a challenger in terms of different price categories?
We will be a leader in all categories, and we will deliver tremendous value to the customer, which is what we have done, and which is why we are seeing the results for our vehicles right now.
When you shared your 2025 plan, you did indicate the investments which the group would be doing. Large part of the investment, of course, is in the auto business. You're sounding much more exciting and much more vibrant about the outlook for autos. Any reason for us to believe that you need to now increase the investments?
We are on track with regard to our investments right now. It's good to have the same level of investment and much better results, but we will look for investments in other areas as well. And one thing that we have promised our investors that we will stay with is investments in auto and farm will come from auto and farm cash flow, and investments outside will come from returns that we will get from all our investments outside auto and farm. So from that perspective, we will continue to maintain that discipline, but we do look forward to scaling up all our businesses.
So if you're excited about growth, if you're excited about investments, operating leverage has kicked in, loss-making businesses are down. So aren't we in for a surprise rather than just normal growth? Because what you are indicating to me are 3 years of, if I may use the word, 3 years of bumper growth. And with bumper growth, operating leverage would kick in. Are you at that curve of transformational growth and higher margin operating leverage benefits?
We are at the cusp of that, and that is again something we've seen as a result of both the auto and farm businesses doing well. We are also confident because of where the order book is for the auto business. We are at this point in time doubling capacity in the auto business as well, as we've announced. So all of those factors will give us a much faster growth rate.
The second biggest company of the group is Tech Mahindra in terms of market cap. It's a Mahindra group company, market leader in terms of telecom, excellent understanding of the business, but unfortunately in terms of pecking order, your aspiration to become a market leader is still a distance away. Why is that?
Over the last few years, tremendous amount of work has been done. One, to diversify outside telecom, which has been the strong suit for Tech Mahindra. We've gotten into a number of other industries. We've brought in a number of large clients. So if you look at large client wins, we're among the leaders in that space. And that's starting to position the business very well. We're also starting to lead on technology in many areas. So a combination of all of these factors puts the business on a very strong wicket. And that's something that is a good starting point for us to start looking at growing that at a much faster clip and improving margins, which has been one question for the business for a long time. But as we get all of these things together, the outcome will be better margins and faster growth.
How soon you will be able to achieve industry margins? I'm using 20% as the benchmark for industry margin.
So that is a journey. And
how long is the journey?
From a time frame standpoint, it's something that we will not make a specific commitment right now. But what is more important for us is to deliver value to our customers, establish as strong a base in other industries as we have in telecom. And as we do that, margins will automatically come.
When you took over as CEO of Mahindra & Mahindra, you gave a ambitious, aspirational and what looks like an easy target now in terms of the return ratios, in terms of growth and in terms of prioritizing businesses. What is that aspirational journey for Tech Mahindra?
The aspirational journey for Tech Mahindra is to be one of the leaders in its space.
Can it reach there?
I am confident it can reach there because we have a fantastic team. We have a team that has delivered on various fronts right now. And it's part of a journey, but that is similar to the journey we've gone through at Mahindra. So we are confident that we can get there.
Mahindra Financials, another big group company. Now that business, I understand there is cyclicality and there is always a macro tailwind and sometimes an headwinds. I would say that it's a Mahindra group company, one of the best in terms of creating a liability franchise, one of the lowest access to both corporate and retail deposit. It has not really lived up to what other peer NBFCs have done. How are you looking at fixing that?
The challenge for us was volatile NPAs. Every time there's an economic crisis, our gross NPAs would get to 16%. But all of it would come back in the next few quarters. So credit losses were never very high. And that's a model that we have changed now. A number of actions have been taken to reduce that volatility, to put the business on a path of much greater stability going forward, to infuse technology and data in a much bigger way. So that business today is actually on a very good track. And this is, I would say, 12 to 18 months of effort that's gone in already. We're starting to see some results of that. Gross NPAs have gone down to the range of 6% or so. But more importantly, we are confident that in the next economic crisis, they're not going to go back up to double digits. They're going to be far lower than that. So that business actually will move to getting a lot more value much faster than any of our other businesses.
So if you have to give us a 3-year outlook, now for any NBFC, the outlook would be based on credit growth as well as liability franchise and which way the NPA cycles are moving. NPAs you've already given us a sense. But in terms of growth and in terms of maintaining the return ratios, do you see a 3-year minimum visibility for Mahindra Finance?
Mahindra Finance in 3 years' time will be a company that is viewed as a very stable company with a very strong franchise, with a strong return and strong growth as well. Right? These are the things that we would see for Mahindra Finance. That is a tall order. We're setting a high bar for ourselves. But based on the trajectory we are at right now, we're confident we can get there.
So the book could double in 3 years or 5 years?
I'm not worried about doubling a book. Right? That has never been the problem. Our team actually has a plan to double the book in 3 years. But at this point, we're really looking at it closely to say, it's more important to make sure our NPA becomes very stable in any economic scenario. It's more important to have a very strong set of customers with a strong customer experience, and that's where digital comes in a much bigger way. So the fundamentals are more important. If you take care of fundamentals, as I said earlier, the results will follow.
But could there be a mix in the composition of the lending book? Because the NPAs are a function of the lending book. Rural versus urban, wholesale versus retail. Could that change at the core itself?
Yes, absolutely. Because that has to change for NPS to be more stable. We're going after rural affluent in a much bigger way. We're going after products like loan against property. There are a number of different things being added to the book that will bring down the NPA profile, that will enable cross-sell. That's another area. We really haven't done cross-sell very well. So there are a number of things which I would look at as the basics, fundamentals, low-hanging fruit, you could call it what you want, but these are things that will make that difference for the business going forward.
I'm looking at some small group companies and I'm using $1 billion as a benchmark here. Swaraj Engine, Mahindra EPC Irrigation, market cap 300 crore. Swaraj Engine, market cap 2,000 crore. When you are consolidating, do these companies which have a market cap of less than, let's say, $500 million, do they need to be listed independently? There is more paperwork for you. There are more board meetings for you. There are more regulatory hurdles for you. What sense does it make to list these two companies?
The first course of action is to see whether we can grow them. If we can grow them to a much larger level, then we don't have to worry about this question. If we cannot, then yes, you're right, we'll have to worry about that question.
So for a shareholder, Mahindra and Mahindra, will it be a holding company eventually which will keep on giving birth to various companies? Because Mahindra and Mahindra, just for the benefit of our viewers, I like to share, it was an auto company which, because of its internal cash flow, has incubated a lot of business. So will that be Mahindra and Mahindra now more like an holdco eventually?
So I would prefer to look at us as a fairly unique federation of companies. One where we can create a lot more value because of the trust that we have in the Mahindra brand, the synergies that exist across the companies that we're starting to see come out a lot more, and therefore be able to deliver greater value to shareholders. There's always been this view around conglomerate discounts.
Holdco discount.
And holdco discounts. But if you look at the value creation that we've shown, our farm business today has by far the highest margins in the industry. That's expected because we've got the greatest market share. But the auto business today, across the auto industry, also has the highest margins, but not the greatest market share. The synergies between farm and auto actually help us do that. So as we think about creating value for our shareholders, if we can create more value by these synergies, then we should be able to create a much stronger company overall. So therefore, I do look at us as a fairly unique federation.
So it's a operating company which is investing in other companies which are getting incubated. Can I redefine it?
Yes, where there is a strong synergy and where that synergy allows us to create greater value than that company could create on its own.
We've seen very big, dramatic changes post-COVID. Government's emphasis on Atmanirbharta, China plus one. Now it is China and Europe plus one. You represent a group which has a very deep understanding of manufacturing. You are in defense, you are in auto, you are in machinery. How real is this excitement in the corporate world about India becoming that the renaissance period in manufacturing has started?
Very strong. I do believe that India has the potential. In fact, I have gone a step further in a couple of forums and talked about why are we looking at plus one? Why can we not set India up as the destination? We don't want to be a China plus one or a Europe plus one. It has to be India as a destination for the world. I know the government is taking a number of actions to make this happen. The level of focus and attention on this and all the conversations I've had is tremendous. And we're starting to see a lot of companies around the world as well start to look at India in a much deeper manner. The conversations that we've had with some companies, the support that we've given some of them, even informally, is something that gives us the confidence today that India has a potential. The next 3 to 5 years is what will define whether we can get there or not. But I think we have to think bigger. We cannot think of China plus one or Europe plus one. We have to think of India as the destination.
So how do you see the next 3 years different from last 3 years? And I'm going to keep the COVID part aside, purely as a business cycle for Mahindra group of companies and for India.
I see the next 3 years with a lot of optimism. Despite the view around global recession, I do think India will be impacted to some extent. We're not going to be immune from what happens around the world. But India is better positioned today. Better positioned because we've taken quicker action in terms of rate increases, in terms of other things to control inflation. Our inflation has not gone up in percentage terms as much as what we've seen in other countries. And therefore, we should be better positioned to weather the storm right now. The fundamentals are very strong in India. And as we have business being done easier in many ways, we attract capital into the country. If we look at 3 years later, I think India should come out much stronger than the rest of the world.
2020, just about every second conversation was centered around COVID. 2021, it was centered around vaccine. 2022, it was all about inflation. What do you think the conversation this year for you, your companies and the boardrooms would be? Will it be inflation? Will it be growth?
For us, conversation, even in 2022, has been growth, despite all the challenges that have taken place. So our conversation on growth will continue. I will expect challenges given the world we are staying in today. Something or the other is going to happen, and we have to be ready for that.
If there's a recession in the world, how prepared are you for it?
We're ready for it. For a recession, first, you've got to make sure that the fundamentals again are strong. So our cost control has been very strong over the years and continues to be so. Our products give us a lot of confidence and strength as well. The order book that we have today, especially the auto side, is amazing. And in some ways, if we have to have a recession, then this is the best time for us to have it, given the strength of the order book. So, as a Mahindra Group, we are well prepared for it today. I do feel that the impact in India will be lower than we see outside, but it's something that we have to be ready for and address.
So if I say that for next 3 years, Mahindra group of companies, whether it is autos or Mahindra Finance, whether it is Tech Mahindra or even Mahindra Holidays, they are at a cusp of not incremental growth, but they're at a cusp of transformational growth. Is my assessment right?
I would agree with that assessment. Right? Because for us, scale is a very important part of our focus. And that's part of the transformation we've driven in the group over the last couple of years, and we need to take forward.
Just a few closing comments. The big deal which in a sense re-rated your electric business, is there another deal around the corner? That's what markets are excited about now that the electric vehicle business has gone beyond proof of concept. Now that launches are nearing. Is there a need and is there urgency to get another deal?
So there isn't a need right now, and we have the capital required for electric. But as we have mentioned in the past as well, we will at some point bring in a second investor besides British International. They came in early because we feel that one, they're a marquee investor. They can help us grow this business well as also, and we value their insights into this business. But we will bring a second investor at the appropriate time. It's not something that's a burning need for us, but we feel that whoever can help us grow this business faster is someone we'd like as a partner.
But eventually, as the business grows, will the electric business be part of Mahindra auto business, or you could eventually, in some point in time, consider it having it off or listing it separately?
We could eventually consider listing it separately. It will depend on how electric grows, and that is a fair distance in the future.
Is it growing as per what you anticipated?
I think electric is starting to pick up faster than we anticipated. The challenge, though, will be with regard to infrastructure. And I would look at a single metric on infrastructure, which is charging time. If charging time remains at 45 minutes for a fast charge, it's going to be difficult to develop the infrastructure as we need it. Because real estate will not permit that to happen, or the real estate economics will not permit that to happen. So charging time has to come to 10 minutes. If that happens, infrastructure will be there in place. So till then, you will have a smaller segment that buys electric cars. Folks who can charge at home, folks who have a second car and are less worried about that, because range anxiety has been solved. We can deliver 500 kilometers, we can deliver 600, 700 if we want, but that is essentially an overkill. So with the born electric vehicles, you will see all of that in place. In fact, with the launch of XUV400 as well, you will see that coming up. But the key is going to be the takeoff, or the inflection point will be when charging infrastructure is in place.